What's going on, everybody, and welcome back to the channel. We got a super exciting day today with a massive day. Not just me, I ended up closing the day a little around $70,000, while some of the members made a shit ton of money. We caught some huge play. The beginning of the day was a little bit on the rough side. We couldn't find any great place, but then I caught the top of some huge spy puts, and spy completely tanked, almost down 2% from where I bought it. And before I knew it, my puts were up a ton, nearly around 500% on the play that I got. It was a huge day, one of the biggest days I've had this year, and I'm really thankful. I want to make sure that everybody knows that my average day is somewhere between $5,000 to $10,000 on the higher ends. The huge days come in here and there, and of course, whenever they come in, I'm very happy about them and I'm very grateful for them. So I want to make a video kind of breaking down this play because it was a very simple play. It was a very simple trade, and kind of just talk about the markets today in general. So I hope you guys can learn a thing or two and maybe hope to aim for some of these goals in your trading career. And don't let these huge numbers make you feel like you can't trade. Even if we all started in a small account, I was just as happy when I first had my first $100 a day way 6 to 5 years ago, as much as I am and now having a high $70,000 a day. So I'm very happy about that. And if you find this information useful, try to make videos almost every single day. Make sure you hit the subscribe button down below, leave a like, share it to a friend, make sure your channel is growing as a lot more people can get some of this educational content. So here we got S&P 500 on a 5-minute time frame, and throughout the day, as you guys can see, we had a massive sell-off. This day here was the FOMC meeting. If you did not watch yesterday's video, make sure you guys go watch that video. I broke down how we had a huge day, and one of our mentees, Zeus, which is now one of our head traders, made over $100,000 trading this huge volatility at S&P 500, showing the market all the way up here and riding it pretty much to the bottom. So today was a new day, and as you guys can tell, we gapped up from here all the way to here, almost retracing more than half the move, right? So during the day, a lot of people were kind of confused on why we were going up after the negative news with FOMC. It was a little bit of a choppy day. I did not take any real place on the SPY. I took one little tiny short towards the open, which stopped me out for a break even to very slightly red, and then I kind of traded with Google and Tesla, both ended up being very slight green to break even plays, so nothing to really write home about. So those plays were a little bit just me not being able to find my groove, as I did believe the market was going to pump to right around this area here, which ended up being the top, but I couldn't really just find good entries to execute. And that's what you have to understand when trading, is it's all about the entries. It's not really about your idea, it's all about the entry. Because the reason is, let's say you think the market's gonna go down, but your entry is right here, right? And then you have the market keeps pumping, you're gonna be underwater in your position and more than likely get scared out of your idea of going down the rest of the day, closing it, and then closing your day red somewhere near the top, just to see this play end up working on your favor. So it's all about your entry when you're trading, guys. It's all about understanding your entry and getting good entries, because you might have the right idea. It's just about where should you enter, right? For this play in particular, that I made the bulk of my money, pretty much all my money today, was on this level right here. So I actually made a video on this on the Instagram as well, a quick explanation. In here we'll dive a little bit more. Here this is what we have, something called a hidden liquidity. I just call this simply a supply level, right? When you have this wicks or this previous high like this, you have that liquidity trapped in there, that supply needed from this wicks here, that once it's gonna hit, more than likely a lot of sellers, the supply is gonna hit and bring the price down. If we go on, I actually trade these on an hourly time frame and a 30-minute time frame. Both of those were all posted, as all this was posted on our Discord server live. Exactly the entry there, you can see it was exactly $3.99 where I entered the puts. Couldn't get any cleaner with those. I'll post some screenshots on exactly how I mentioned the play, and I even updated the play. I said in the Discord we were gonna get all day fader if we confirm a lower high, which ended up confirming, and we wrote this all the way down. And I just kept telling the team that 389 was my goal. We got to 390, but then I closed it before I got this little bounce here. So everything just played out perfectly. So why was I so convinced that this was going to be the play? So first, I actually looked at a larger time frame so I don't get shaken out. Because let's say I go on a 1-minute time frame, right, and then there could be some highs and some lows. In this case, there really wasn't, but let's say we had just kind of been sideways in here for a little bit, I could have gotten shake on my position and could have got scared away from it. But if I go on a larger time for like the 50-minute or the 30 minutes, I'm going to give myself more time. I'm going to give myself the benefit of the trade playing out without having to rush. So that's why midday or whenever I think a play can ride for us today, I like to look at some of those larger time frames. And the larger time frame, guys, is how you're going to catch those big moves. Without those big time frames, you're not going to catch enough of a percent to make a ton of money. Keep in mind, I made $70,000 roughly with the 500% gainers, so you can do the math about how much I put in to kind of get those big returns, right? Not only we had this, but we also had one of my favorite things to trade, which is a golden pocket rejection or a golden pocket bounce. So you're going to go here and take your Fibonacci retracements. If you not know what Fibonacci's are, Well, there are a way that you can kind of time predict where your price may reject or might bounce. Now I have my Fibonacci settings as just showing the 0.5, the 0.618, and the 0.786 level. Now another level that's very important is the 0.66 level. So we call the 0.66, which will be right above the 0.618 and the 0.618, is what we call a golden pocket. A golden pocket is where price is more likely to come, hit that level, and reject and continue with the overall trend, or the opposite, come go down, bounce on that level, and then continue to trend up. So in this case, we had overall then of down, right? Then we had this retracement all the way up to golden pocket, which coincided with my hidden supply level right here. So I had both of those confirmations together to then continue this trend down and make this lower low on the higher time frame. Guys, if you're trading on the 5-minute, this could look like an uptrend because you were only focused on this move here. But if you zoom down, you can see the overall downtrend is this is the overall downtrend. So you look for a lower high right at the golden pocket level, and you look for this lower low down here. All right, so that's exactly what I was focused on, and that's what I was looking at, and that's what I told the team. That's why the team ended up eating, banking, and making a ton of money with us over at the Big Gains Club. Make sure if you do want to join the team, hit the links down below. If you're watching this video and we're gonna get half off for your first month, maybe shoot me the DM. I'll hook you up with a coupon for your first month half off. So that was just simply the way I traded it. As you guys can tell here, I'm not using any indicators. I'm solely using the price action, because the price action is going to dictate where price is going to go. Guys, if you're trading with a bunch of indicators on, I recommend turning them off. I do use a couple indicators on my Thinkorswim charts, but on my trading view, I like to have a clean chart to just look at the pure price action and focus on the supply and demand area, and focus on some of these Fibonacci retracements and a couple other tools that I like to trade. So if you've never looked into Fibonacci and how to trade them, highly recommend you trade them, because you're gonna see how accurate they are, especially in a larger time frame, how accurate they are at predicting bounces or rejection. This is a really perfect play. It was never in the red at all. It was green the whole way through, and we made a ton of money, and I'm super stoked about that. So if you learn more about the stock market, guys, the crypto market, make sure you hit the like, subscribe button, and leave a comment on what you thought today was, how'd you do today, if it was green, if it was red. If you have advice, I'm always here to help, and as always, peace.